Hey everyone, Rivian is scheduled to report second quarter earnings results on August 6th, and investors are curious what to expect from the electric vehicle maker from its upcoming earnings release. I'll preview what investors can look for from Rivian. We'll also update my buy recommendation for Rivian stock and let investors know if they should buy Rivian stock before earnings or after earnings, or if they should buy Rivian stock at all. I'll do all of that as well as discuss Rivian's investment or investment from VW in Rivian and what that could mean for Rivian stock investors. So let's get right into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so one thing we already know about Rivian's upcoming earnings release is how many vehicles the company produced and how many vehicles the company delivered. Rivian updated investors with these numbers on July 2nd, and the company said it produced 9,612 vehicles in the second quarter and delivered 13,790 vehicles. Rivian also highlighted that they're on track to hit their target of 57,000 vehicles produced for 2024, which was a bit of a disappointment for Rivian stock investors who were hoping for an increase of that annual production target. Like last year, after the first and second quarter, Rivian increased their production target and ended up hitting above what they initially expected for the year, 14% above to be precise for 2023. However, 2024 is shaping to be a more difficult year, and the company is reporting flat numbers for year-over-year production. Now, combined with the lower average selling prices, Rivian's revenue is not likely to grow in 2024. So since growth expectations are limited for 2024, Rivian has focused on cost controls and making its vehicles more affordable. They recently launched the R1S leasing program and grew the number of states with this offering. Additionally, the introduction of the standard range R1 variant brought more accessible pricing to the R1 platform. So far, this is just keeping Rivian on pace with what's going on in the electric vehicle market, which is all of the competitors are lowering prices and increasing availability. So Rivian has to take these measures just to stay afloat because the industry is moving downward. So in the second quarter, Rivian paused production to retool their manufacturing plant and upgrade and design to deliver greater plant efficiency, with the R1 line rate expected to improve by approximately 30%. As a result of this, Rivian expects greater plant efficiency will result in lower conversion costs per vehicle during the second half of 2024. So this is something that Rivian stock investors should look out for when the company releases quarterly results. You want to look for how these upgrades are working to lower costs for Rivian. How much lower cost? Are they utilizing this to increase production at lower costs, or how are they specifically using these upgrades to lower costs and make their goal of hitting gross profit margin positive by the end of 2024? Speaking of gross profit margin, in their first quarter of 2024, Rivian's gross profit per vehicle delivered was negative $38,784, a whopping loss on every car they sell. And so this is one reason why Rivian's stock price has underperformed for such a long time now, because they're losing so much money with little progress on profitability, and their massive cash balance is dwindling down. So those upgrades Rivian made and their progress towards gross profit margin positive by the end of this year should be top of mind for Rivian stock investors. They've got to find a way to reduce these losses, and so it gives them a runway to get to their lower priced models, which, due to their greater affordability, hopefully will lead to better profitability for Rivian, but also that is unsure as well. Still, management says they remain confident in their path to achieving modest gross profit in the fourth quarter of this year. Now, this is coming at a high cost for Rivian. They've had to take several measures to hit this target. For one, they paused production in their manufacturing expansion in Georgia, and they're continuing their expansion plans in their existing manufacturing facility. So that extends out their growth ambitions by several quarters, perhaps several years. Secondly, they had to sell a stake to VW. And I want to hear more from management about this, right? I told you I would talk about the VW investment. I want to hear more about this, and I'm not quite convinced that this VW investment was a strategic positive for Rivian. It seems to me that there was some desperation in this deal. Rivian, as I mentioned earlier, has been losing billions and billions and billions of dollars, and it once had a cash balance of near $20 billion, and that's quickly come down to a little over $7 billion, and they've had to borrow more and sell more stakes to just keep it there. And so this investment from Rivian, I'm not sure was a strategic positive for Rivian from VW, or was it a move because they just needed that cash and they were finding very expensive to raise capital under current market conditions, and so they had to sell a piece of the company, give up some strategic advantage, because remember, in the deal, they noted that they're going to create a joint venture where VW will get to access Rivian's software stack. And so was that really a positive for Rivian? I'm not quite convinced. I want to hear more from management to make me feel reassured that this wasn't a move out of desperation. All right, so one of the bigger things to look out for as well is progress on Rivian's next generation platform, which is going to come at a significantly lower price point than what they have right now. Their electric vehicles right now are very expensive, $75,000 and above. But the R2, which is going to be a versatile new mid-sized SUV with room for 5 people, is going to start at around $45,000, and management is forecasting this will begin production in the first half of 2026. Now, so far, Rivian's management team has been pretty solid with their forecast. Rivian has not been like Tesla when they tell you something is going to happen at a second quarter of a certain time, then it gets delayed by several years. Rivian hasn't demonstrated that kind of misrepresentation of their forecast, so investors can be reasonably confident that Rivian will be able to launch this $45,000 model in the first half of 2026. And if they are able to achieve this, that will open up a massive market for Rivian, because that's more customers that can afford at that price point, where at roughly double of where they're at now, it makes it really unaffordable. And consumers are not adopting electric vehicles mainly because of the combination of inconvenience and more expensive price. So this gets Rivian closer. And then following the R2, they revealed the R3 and R3X, which will be priced below the R2, and it'll come out after the R2. So sometime probably in 2027, they'll upgrade to the R3. And the R3 is when they'll be able to expand internationally. And so that opens up an even broader market for Rivian. So this is the big opportunity for Rivian. Rivian stock investors should want to know more about this when the company reports up their updated results. And if they're making progress in this regard, Rivian stock investors can be pleased. Now, Rivian is trading at a forward price to sales ratio of 2.499. The valuation has more than doubled according to this metric from the lows of around April, as the company has reported several positive metrics that's encouraged investors, as well as the investment from VW that made it more likely that Rivian will reach those lower priced models. So before that VW investment, there was some risk that Rivian would not even get to the point where it can start production on those lower priced models, because they would run out of capital and they would run out of investors willing to give this company more money, because they've already lost so much money. Investors might be hesitant to give it any more. But with the VW investment, that gave investors confidence that, okay, they can make it there. And then when they launch that lower priced model, the greater production units will lower the cost per unit and therefore lower the loss per vehicle and expand the company's runway and give it more time to then get to the R3, which would lower the cost per vehicle and expand internationally. And then the company can actually sustainably become positive in terms of cash flow and profitability. Still, I think the risks for this company are too high for the current valuation. So I would advise, to answer the question, should you buy before earnings? I would say no. I would say wait until after the earnings release. Let's get the new information and then let's make a decision after that. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button and I'll see you again soon.